The Chicago real estate market is getting more interesting by the week. Thanks for stopping by. It is time for our monthly Chicago real estate market update. We got a lot to talk about today, folks. You've probably been hearing a lot about the national housing economy and what the rise in interest rates is doing to that market. Today, we're going to talk about that, and we're going to talk about Chicago. Chicago is different, folks. It's different from some of these other big markets that you might have heard about. We're going to get into all of that in just a second. But first, as always, not only is Chicago different, but your neighborhood is different. Your community that you live in, whether it's Lakeview or Naperville or Orland Park or Oak Park, the trends for prices and whether it's a buyer's or a seller's market, it's going to vary across the board. And if you want to know what's going on in your own backyard, fill out that form on our website. Plug in your name, your email, and the neighborhood or community that you are interested in. We will send you a handcrafted report on exactly what's going on in that market. All right, let's kick things off by doing the numbers. In the Chicagoland market, median prices are up 7%. Year over year. They were flat for a couple of months there, but they've started creeping up again over the past 2 months as some of those closings from the very busy spring market have hit in May and June. In the city of Chicago, up about 1% year over year. Single family homes are up more like 3%. Condos are up about 1%. And in downtown Chicago, prices are pretty much flat, up 0.2% year over year to a median price of $415,000. Moving on to the demand side of the equation, let's look at the number of homes that have gone under contract. By the way, it's halftime on the year. We got about 6 months worth of data. So let's look at some year-to-date numbers just for the contracts. In the Chicagoland area, there have been 13.4% fewer homes that have gone under contract in the first 6 months of the year as compared to the first 6 months of 2021. In the city of Chicago, the number of homes under contract in the first 6 months of this year is 7.2% lower than it was last year. And in downtown Chicago, it's only 4.6% lower than it was last year. Downtown Chicago has been on a little bit more interesting of a ride because the first part of last year wasn't as great as it was for the rest of the market, but then it really picked up in the summer when vaccines were widely available and everyone saw that downtown was actually the most vaccinated part of probably the whole state. And that continued, and actually for the first couple of months of this year, contracts were up year over year, and then just most recently in June, they were down pretty significantly compared to last year. That's most likely because June of last year was especially good, not so much that June of this year was especially bad for the downtown market. Moving on to the supply side of things, we're going to look at the number of homes for sale at the end of last month. In the Chicagoland area overall, there were 20.4% fewer homes for sale. So there's still less out there in June of this year than there was in June of last year, which was way less than there was in June of 2020 or June of 2019. So there's still not a lot to buy, and that inventory number just keeps going down. If you look at the monthly numbers, it may be leveling off and starting to creep back up a little bit. We're just not seeing that in the big picture yet. Similarly, in the city of Chicago, there's 19.3% fewer homes for sale, and in downtown Chicago, there are 23% fewer homes for sale than there were this time last year. Again, a little bit more of a decrease in downtown Chicago simply because it had further to fall. So today I want to talk about Chicago exceptionalism, okay? So a lot of these trends that you hear about the national market, the national housing market, they'll apply to Chicago, but not always, and not always quite as much. Chicago doesn't have as many extremes. That's why we do this report, because it is going to be different than what you're hearing in the rest of the media. So, Realtor.com puts out some great data every month. And the big headline from this most recent data set is that inventory is rising. So check this out. In Austin, there were 144% more active listings in June of 22 than there were in June of 2021. So there are way more than double the amount of homes on the market than there were last year in Austin. In Phoenix, it's up 113%. Nashville, up 85%. Denver, up 58%. And in Chicago, it's 13% fewer listings right? So you just heard me say that a second ago, there's fewer homes for sale, but even the Realtor.com numbers show that Chicago has less inventory in June than it did in June of last year. In a lot of these markets that you've been hearing about where prices are going crazy, there's significantly more inventory than there was last year. That's not the case in Chicago at this point. In fact, of the top 50 metros in the United States, only 9 of them had less inventory in June of this year than they did last year. And only 3 of the top 50 had lost more inventory than Chicago. So in terms of increases in inventory, Chicago is ranked 46th out of 50 in terms of increase in inventory because we've actually lost some inventory year over year. Let's look at price drops now. Price drops are another indication that sellers put their home up at maybe a little bit of a crazy price. It doesn't work out, they have to drop it to something that's more in line with the market because they're not getting any traction, not getting any offers. So Chicago did have 4.6% more price drops in June of this year than they did in June of last year. Austin had 486% more price drops. Phoenix and Scottsdale had 398% more. Keep in mind, those markets probably didn't have any price drops last year. I don't know if anyone had to drop their price in Phoenix or in Austin in 2021. Exaggerating a little bit. So the basis is pretty low, which is why you see those crazy increases. But the point is, there are a lot more price drops in those markets where Chicago is a lot steadier. When it comes to an increase in price drops, Chicago is 49th out of the top 50 metros. So sometimes Chicago is just behind the curve a little bit, and that trend will eventually catch up to us. But a lot of the time, that curve is a lot softer than it is in other parts of the country. And that goes in both directions. So for example, over the last year, according to the Realtor.com data, the median listing price in June is up only 2.8% for the Chicagoland area. That's the 9th smallest increase of those 50 metros. And in Austin, list prices, despite all that extra inventory, are still up 18.6% year over year. Nashville's up 30%, Miami's up 40%. By the way, the housing shortage in Miami must be wild. In Chicago, prices go up a little bit less, they go down a little bit less. We've got more room to build. Our population is already higher, so migration patterns maybe don't hit us quite as hard. So, bottom line, Chicago is always going to be a little bit of an exception to the headlines you're reading about the national housing market. So make sure to give us a like and subscribe so you can get these updates every month. Find out what's going on in the Chicago real estate market. And again, remember, not only is there Chicago exceptionalism, but there is neighborhood and community exceptionalism too. So your neighborhood and community are maybe and even probably going to be different than this. I do think that there are some neighborhoods and communities where we're going to see more substantial price corrections than we will see in the overall market. So make sure to head on over to our website and fill out that form with your name, email, and the neighborhood and community that you are interested in, and we'll send you an update on that market so you can make informed decisions for yourself. We'll see you back here next month with another Chicago real estate market update.